Welcome back to Simplex Accounting YouTube channel. Today we have an incredibly important topic to discuss: financial planning for small business success, setting goals and budgeting. Whether you're a seasoned entrepreneur or just starting your small business journey, understanding the significance of financial planning is key to your success. In this video, we'll dive deep into the world of financial planning and provide you with the guidance you need to set goals, create budgets, and monitor your performance against targets. By the end of this video, you'll be empowered to develop a sound financial plan to support your business growth. So let's get started. The importance of financial planning. Before we delve into the nitty-gritty of setting financial goals and budgets, let's first discuss why financial planning is so vital for small business success. Financial planning is like the sat-nav for your business journey. It helps you navigate the ups and the downs and make informed decisions and stay on course towards your goal. Financial planning ensures your business's financial stability, enhances decision making, and prepares you for unexpected challenges, which we all know can arise in the business world. Now, let's move on to setting SMART financial goals. This is where you define your destination on the business map. Here are the steps to set SMART financial goals. Identify your goals. What do you want to achieve financially? Increase your revenue, reduce operational costs, and improve cash flow. Check out our video, How to Manage Your Business's Cash Flow, for tips. Make them SMART. SMART is specific, measurable, achievable, relevant, and time-bound. If you had a bakery business, we could say increase monthly cake sales by 20% within the next 3 months by launching a new line of premium cakes, promoting them through social media and local advertising, aligning with your bakery's growth strategy. This is specific because you're talking about increasing your monthly cake sales. It's measurable because we're talking about achieving a 20% increase in cake sales over the next 3 months. It's achievable because we are launching a new line of premium cakes and we're going to promote them through social media and local advertising. It's relevant because we're increasing cake sales and it aligns with the bakery's growth strategy. And time-bound, reach the 20% sales increase by the end of the 3rd quarter. Now let's look at another example, a marketing agency. They might say improve client retention by achieving a rate of 90% or higher within the next 12 months through the implementation of a client satisfaction survey, addressing feedback, and then providing additional value-added services to enhance the agency's stability and the revenue. This is extremely specific. We're talking about improving client retention rates. It's measurable. We're saying we want to achieve a client retention rate of 90% or higher within the next 12 months. It's achievable. We want to implement a client satisfaction survey, address any feedback, and provide additional value-added services. It's relevant because we have higher client retention that is going to enhance the agency's stability and revenue. And finally, it's time-bound. You want to reach the 90% retention rate within the next 12 months. The final example I'm going to give you is if you are a painter and a decorator. You might expand the client base by acquiring at least 10 new residential clients within the next 6 months through increased online presence via social media marketing and active participation in your local networking events, supporting the overall business's growth. This is specific because we're saying we want to expand the client base. It's measurable. We want to acquire at least 10 of our residential clients within the next 6 months. It's achievable. We want to increase the online presence through social media marketing and engage in local networking events. And it's also relevant. We want to expand the client base to support the business's growth. And finally, it is time-bound. We want to gain those new 10 clients within the next 6 months. My number 1 tip to you is to prioritise. Choosing what is the most important goal is important. You want to do it based on urgency versus importance and impact versus effort.
Xero is a fully Making Tax digital compliant accounting software to help you run your business by sending invoices, creating expense claims, viewing reports, and helping you get paid quicker. It has a large variety of apps that you can choose from in the App Store, so any apps that you currently use can integrate seamlessly through Xero's App Store. HubDoc is used for any manual data entry, so these can include any kind of receipts and invoices as attachments on your transactions in Xero. You can also have fixed assets and inventory directly through Xero. Xero's main dashboard is really user-friendly, so it has your bank account, cash in and cash out, accounts to watch, bills that you need to pay, and invoices that need to be paid to you. Thanks Xero, back to the video.
Once you have your financial goals in place, it's time to create budgets. Budgets are your financial roadmaps guiding your day-to-day spending and investments. Here's how to create a budget. Estimate your income, list all of your expenses, categorise your expenses, set limits for each category, and finally, continuously track your spending and adjust your budget as needed. Setting financial goals and creating budgets are fantastic, but they won't mean much if you don't monitor your performance against these targets. To effectively monitor your performance, you need to regularly review your financial statements. You need to compare your actual financials to your budget. Be ready to adjust your strategies if you're not meeting your targets. While you can do this on your own, it's also okay to ask for help from a professional. Financial planning can be complex, and seeking help from a financial advisor or an accountant can provide you with valuable insights. Consider seeking professional advice for complex tax situations, major financial decisions, or legal compliance matters. A professional can help you make the best choice for your business's financial health. As we wrap up, I want to emphasise that financial planning is not just a one-time task. It's an ongoing process that evolves with your business. By setting clear financial goals, creating budgets, and diligently monitoring your performance, you will be equipped to make informed decisions and achieve long-term success. Thank you for joining us on this journey through financial planning for small business success. Remember, your financial plan is your business's blueprint for growth and prosperity. If you found this video helpful, please give it a thumbs up, share it with your fellow entrepreneurs, and subscribe to Simplex Accounting for more valuable insights on your business's success. Until next time, keep planning, keep growing, and keep thriving. Bye.